Hey everyone, and welcome back to the channel. Today we're diving into the altcoins I'm steering clear of and those that I'm actually actively trading in 2025. We'll also explore how to identify altcoins with better liquidity, making them way more suitable for leverage trading, which is what we like to do. Before we get started, don't forget to like and subscribe. We have so many new members joining our small Discord community, and if you haven't, you can find the link to do so in the description box of this video. In leverage trading, liquidity is absolutely paramount because it ensures that large positions can be entered and exited with minimal slippage. Here's how you can assess the liquidity of altcoins. First thing you can do is you can analyze the trading volume because high trading volume often indicates strong liquidity. However, we still need to be cautious that some volumes can be artificially inflated through practices like wash trading. We can use platforms like CoinMarketCap or CoinGecko to check the 24-hour trading volumes and then compare volumes across multiple exchanges to identify the consistent liquidity. The other thing we can do is to examine the order book depth. Now, order book depth can reveal the number of buy and sell orders at various price levels. A deeper order book suggests higher liquidity, which is reducing the impact on large trades that are placed on price. For that, we can utilize tools such as CoinGlass to view aggregated order book data. We can look for tight bid-ask spreads and substantial volume on both sides of the order book. Altcoins listed on major exchanges typically have better liquidity due to higher user engagement. So here we can simply verify if the altcoin is listed on multiple reputable exchanges. Now, another thing we need to be aware of is that we need to monitor the market depth over time because liquidity is not static. It can fluctuate based on the market conditions. So monitoring market depth over time provides insight into the altcoin's liquidity stability. Another thing for altcoins that are involved in DeFi, for example, we can look at the total value locked, which is the TVL. So a higher TVL would indicate that more assets are staked or locked in the protocols, which is suggesting somehow a better liquidity. You can check the TVL metrics on platforms like DeFi Llama. You can also compare the TVL of different altcoins to gauge their relative liquidity in the DeFi ecosystem. Now, there is another way that I like to pick which altcoins I steer away of and which altcoins I actually trade by simply looking at the chart. So let me show you how I do that. So what I like to do is I like to go on a higher time frame, such as the weekly, and look at the altcoin from a larger perspective. So for example, Cetus is a coin that I would like to be involved with. The reason for that is because the coin is simply maintaining the bullish range. We identify price from as far away as we can get data from, and we want to see if price is still maintaining some sort of bullish structure. Now, I understand that here we have a massive drop, but what's important to me is that we haven't breached this low here and we haven't breached this low here. So that is the first thing that I look at in an altcoin, because once that altcoin is maintaining the 0.236 level, for me, that is bullish, meaning that the altcoin will then have a chance to reach to the 0.786 at the very minimum. Right? So this is one thing I've been trying to teach you guys. Utilize this fib tool. I've given you the fib tool in my other videos. I think I have a dedicated video for this tool, but this is the first thing you want to see, right? You want to see that the altcoin is maintaining the 0.236 level of this whole price range since it existed, right? Or the data that you can get on the chart. Now, another example I want to look at is HBAR. Now, this is an interesting one because before we had a bearish price range on HBAR, and then we consolidated and we broke from that range, creating a new leg. So now I'm interested in only trading this leg, right? Only trading this bullish leg. So if price retraces and it maintains the 0.236, even if it drops down again, I'm expecting it to maintain the 0.236, and then I would expect to exit any trades that I managed to catch here at around the 0.786, which is at 0.32 cents for HBAR. Now, it has potential to go even higher, but this is going to be my safe zone for this bull run where I will be exiting 80% of my position at that point, right? Because I don't know what's going to happen beyond that, because this is the price range that we're currently developing. Now, let's see another example. For example, SUI. SUI is also a very good coin to trade for the simple reason that we're maintaining bullish structure, right? We have retraced a lot, like extremely. We have retraced almost to the 0.236. So I'm going to be happy even if we retrace again back to the 0.236. I'm happy to trade it to the 4.3 cents. And then from the 4.3 cents, everything else is going to be a price discovery. So there is going to be a new price leg created that we're going to need to trade. So, considering how it moves right now and how, bullish it looks, to me, this is most probably going to bring some new all-time highs. So I'm likely to potentially close, I don't know, around less than 80% that what I usually would do, but I'll probably leave a little bit of a higher runner. And then depending on how Bitcoin reacts, then I'm going to close that trade, right? When I decide that we're reaching bear market, which I don't think we have reached that level yet. You guys know very well what I think about that. Another coin that I'm interested in trading is NEAR. Why? Same thing. Same thing. We're maintaining bullish structure. Yes, we're dropping down even below the 0.236, but we haven't dropped below the 0 point of the fib tool. Once we drop from the 0.5 tool, I'm not interested in trading it anymore, right? And from here, all I want to catch is $7.2 on NEAR, and that's when I know I want to be out of this trade completely. DOGE is another good example. As weird as it looks, it's still maintaining bullish structure and it's reacting from zones. So I'm expecting to hold until almost 0.4 cents. Now, FED is another one that even though it has retraced a bit deeper, it still hasn't dropped under the zero. So I'm expecting $2.7, and that's when I want to exit. Now, a coin, for example, that I don't want to be involved in is CASPA. Right? CASPA is not something that I want to be involved with. Why? Because we have broken levels. So now this is a bearish price leg that we're looking at. This is an extremely bearish price leg. Well, you can still trade that, right? You can still trade that. But then when you're trading bearish price legs like that, where you want to be exiting, it's around the 0.5 of that bearish price range. So for CAS, that would be around $0.12, right? And the best thing you can get is potentially reach 0.786 and then create some sort of ranging structure before you exit. But I'm not interested in trading that, because for me, the safest bet would be to exit around the 0.5, because I don't know if that bearish leg is going to be extremely bearish. And what happens with extremely bearish legs is they retrace to the 0.5 and then they drop and make a new lower low. So another coin that I'm not interested in trading is Kava, right? For long-term holds, I'm absolutely not interested in trading it. Why? Because Kava is in a bearish leg and it's rejecting from the 0.5. So this is the last price leg, and you see how it's rejecting from the 0.5? To me, that entails that now we need to find a new lower low. Now, using my indicators, which are available for you guys to purchase, they're only $20. You can find them in the description box. I can see that there is some liquidity that's lying around 0.74 cents. Now, that would mean to me that potentially from here, there is going to be consolidation, maybe another tap into the buy zone, and then we take that liquidity, but that will be the second test of the 0.5, which then I'm going to be exiting heavily from, and I'll be interested to find a new lower low, right? So in the best case scenario, what you can see is you can create a range here as well, like we said in the previous example, where you bounce from the 0.786, bounce from the 0.236, and so on until you exit either to the upside or to the downside to create a new price leg, go into further price discovery. What else we can look at? We can look at Pyth. Pyth as well is something that disappointed me a lot because we started dropping and we started losing levels, right? We started losing levels. So now we're officially into a bearish price, leg. So from here, I'm not going to be interested into chasing anything that's higher than the 0.5. So that would be at the 0.3266 for Pyth, for example. So, probably you guys think, oh, that's crazy, but it's not actually, because this is the last bearish leg that we're trading with broken structure. This is the price range that this coin is finding itself in right now. So I'm expecting from it to bounce from the 0.5 and then completely drop and look for new lower low. And again, if we're lucky, we could potentially get max 0.786 at 0.45 cents and then start creating a range from here before we decide to exit either to the upside or to the downside. But because we're so close to the end of this cycle, I am not willing to risk on coins that are looking like that. All right, you guys, that's it for today. I hope you found that helpful. We're going to be live back next week once token 2049 is finished. I'm literally filming this after the crypto polo. It was very hot. We were out all day, so I'm actually completely exhausted. So I hope you found this video super, super useful, and I will see you guys in the next one.